PacWest Bancorp is the one we're talking about here. The shares are popping after its latest quarterly results. CEO Paul Taylor pointing to deposits rebounding in April after stabilizing in the latter part of March following the banking turmoil. Now, of course, we have had these regional banks in focus with yesterday First Republic's results. It fell about 12% earlier in the day and then fell as much as 50% later. At the same time, PacWest was down, I think, about 9% yesterday, so reflecting some of the concerns. First Republic, gosh, is still down today 20%, but PacWest is seeing this rebound. So it is looking more and more differentiated within this regional banking space here. It's almost like First Republic and everything else at this point, and PacWest kind of emphasizing that. I
mean, even with this move that we're tracking, year to date, PacWest still down by about, 48%, and coming into today's activity had been down by about 55%. And so, continuing to track, and there's a 3-month view of PacWest. Thinking through what they also disclosed during this quarter, a few things that were called out: lower operating expenses, lower provision expenses, investors paying close attention to that, as well as higher fee income as well for the bank. But a larger question of where some of those, even those call outs, still hold true for quarters to come from now. So for PacWest and a lot of the regionals, that's why they've been so in focus, as well as tracking what the deposits have been over the course of this.
Well, it's also sort of getting the balance sheet in order more broadly beyond deposits. In the case of PacWest, the company is going to be selling off some of its assets. It says it expects total assets to drop to about $35 billion over the next few months. It was at $44 billion at the end of the first quarter, as it tries to sort of get liquidity more balanced. At the same time, again, to bring it back to First Republic, there's some reporting this morning that the company is also exploring divesting assets. It seems like, at least from as the market perceives it, it's in a very different position here. So the reporting from Bloomberg is that it's talking about divesting $50 billion to $100 billion worth of assets in order to raise cash. So, as reflected in the shares yesterday, and I think again today, there's still a lot of concern. And it's interesting, as remember yesterday we talked to David Chiavarini over at Wedbush. He said he didn't seem to be concerned that First Republic would survive. He said it would. But the market right now seems to be asking that question.
I think there's been a lot of confidence, and especially in First Republic's case, a confidence that because of the number of other big banks that have already kind of, if you will, signed the dotted line, at least in putting uninsured deposits into their own balance sheets, into the balance sheet of First Republic, that there is that sign of confidence that they have that they're going to make it through. And so as long as the other banks are still in a concerted measure saying that we're willing to back you, or we're willing to somehow make sure that we are also backing this recovery and reinsuring confidence in the broader system, that we're not going to let First Republic fail. At least that has been what's been signaled through their actions as of right now.
And I'm seeing some new headlines actually on First Republic. First of all, it looks like it was paused for volatility, which happens when a stock falls by a certain amount. It gets the volatility curve gets triggered, and it pauses for a bit in order to try and sort of get the bid and ask in balance. But there does seem to be some reporting this morning from CNBC as well that there doesn't seem to be on the part of regulators or on the part of the White House to pressure banks to try to help here on formulating an asset sale plan, as that report said, again, that they're talking about selling assets. Again, that's according to CNBC's David Faber. So, that perhaps is also contributing to the continued selling here this morning. It's pretty remarkable to see a stock down 49% one day and then down another 20% the next day. After it's already down, 90% this year, right?
Exactly. And consecutive days. Yesterday, it was halted multiple times for volatility trading pauses as well. So a ticker to continue to watch as we move on throughout the rest of today's session, and just as they're trying to announce anything that will help to continue to save the company and the bank here.